Happy Friday, traders. Well, look, at this time of the year, generally, week before Christmas, you expect quiet markets, and generally you get that. But at the moment, that is certainly not the case. We have seen some great two-way volatility across most asset classes. Last night we had some very important economic data out of the US. That was US CPI inflation data for November. Market was expecting that to come out at 3.1% year on year, but it actually came out a lot lower at 2.7%, so a huge miss to the downside. Market took this initially as extremely risk positive, so we saw US equities, S&P, NASDAQ spike. We saw Bitcoin, that's been struggling, spike as well, almost back up to 89, 90,000. We saw obviously the US dollar sell off, as it would when we see inflation come off as much as it did. Precious metal gold spiked up and almost made a new record high. But then confusion set in. The Bureau of Labor Statistics, the BLS, that releases the data, because of the US government shutdown, did not collect all the data. So market started thinking, whether or not this 2.7% much lower print was actually real. So we did see a lot of reversal of the initial risk positive move. So and the biggest reversal was Bitcoin. I mean, that was up at 89,000, back down towards almost 84, lost about $5,000. We saw US equities, S&P, NASDAQ lower, US dollar rally, and gold come screaming back off. So traders chasing their tails overnight. But the bottom line is that the market still now, at least thinking that inflation did not or is not spiking up higher. So the next Fed meeting, which is in January the 28th, market's starting to think that there's a good chance that this could be a live meeting and we get another Fed rate cut. But in any case, if it doesn't come in January, there's a very strong case it's going to come in March. So rate cuts certainly will be coming early next year. Okay, today is super important day. Today's Bank of Japan Day. The market is expecting the Bank of Japan to raise rates from policy rate from 0.5% to 0.75%. Now that is a huge deal. It's the first time that that policy rate will be that high in 30 years. Now over the last few years, the market has feasted on Japanese rates pretty much at zero. Reinvested that, chasing risk globally, and particularly things like the NASDAQ, which is led, and NVIDIA, etc. The carry trade has been a huge part of why asset markets are priced where they are today. And I'd say it's very safe to say that there's no way in the world that equity markets globally would have made those record highs what they've had this year if it wasn't for the carry trade and Japanese rates being much lower and near zero. So certainly that is not the case anymore. The maths doesn't add up on the carry trade. Bank of Japan raising today again is a big deal. It'll be very interesting to see, even though yes, it is expected, it won't be a surprise, how the market reacts. There will also obviously be a press conference post BOJ, and I think maybe that might even be more important than the actual rate decision, for the simple fact is that the market will be looking to the forward guidance of the BOJ, just how much appetite they have for potentially more rate rises. But certainly today, no doubt, we are going to see some volatility. So you need to be careful out there. Good luck, and we'll catch back in with you next week.